Hi, everyone. Welcome back to another session on strategic financial management. So yesterday, we completed the ratio analysis and calculation related to liquidity ratios, profitability ratios, and we finally did leverage or debt management ratios. And today we have two more sets to complete, which is investors ratio or investor ratios and also efficiency ratio. So I'm going to go with investors ratios first. So investors ratios, we're going to calculate the EPS, which is earnings per share. EPS means earnings per share, which is equals to net profit divided by number of shares issued. Oh, why is it? Okay, there you go. Number of shares issued. So this is related to EPS, earnings per share. Next, we're going to calculate the DPS, which is dividend per share. So that is equals to dividend divided by number of shares issued. And then finally, we are also going to calculate dividend cover, which is equal to net profit divided by dividend. That's it. So three simple calculations, and this is related to investors ratios. Right. EPS, number of shares. Okay, all three, two has number of shares issued and two has net profit. So I'm going to take it. Let's first take the net profit. So net profit is in the statement of comprehensive statement of profit or loss, or you also call it income statement. So you can either call it P&L or income statement. So net profit is after all the taxes, all the expenses have been deducted from the profit, which is this one. So it is 5865 and 4019 for 2021 and 2020. All right, 2021 and 2020. So I'm going to take the net profit for 2021. 5865, and then we also have the net profit over here. So I'm going to copy paste both cells. There you go. And now we have to find the number of shares issued. So number of shares issued will be given by the company. So you just have to search it. Where is the search? Oh, there you go. So you can just write number of shares. You have the answer somewhere. It should be somewhere here. Number of shares issued. I don't know where I found. I can't remember actually, but it is in the annual report. You just have to find it. Okay. It is somewhere around here. They've definitely given you the shares. Let me check. Oh, there you go. Oh no, this is not this one. Not this one. This is the chief number of shares. No, not this one. Not this one. Number of shares issued. Okay, I found it all the way down. Not this, not this. They did have it somewhere. I can't exactly remember where, but it was there. Okay. So you have to find the number of shares in the annual report. Just type it on the search bar. You'll be able to find it. Okay. Where is it? Okay. So number of shares issued. Anyways, when I actually found it, I can't quite remember where I got it. But anyways, so in 2021, the number of shares issued was 1601, and in 2020 it was 1913. Okay, it usually doesn't happen this way, but for some reason, both years it was different. Okay. No, this is not the number of shares. It should be somewhere. Wait, I have to find it. Shares. It cannot be different. Wait, give me a second. Let me type number of shares. It should be somewhere here. I did find the number of shares from the annual report. I can't remember from where I got it. I should have noted down the page. I forgot about it. It is there in the annual report. I just cannot fit. Oh, here it is. Yep, this is here. This is the one. See, number of issued. This is a share issued. See this? So 1804. This is the one. Okay. So you will have to find out. Just type what you want, and they will be giving you 1804. That's the number of shares issued. So you have to take that amount and write here 1804, number of shares issued, and we have to fill in here as well. Is that it? Yeah. And then we need to find out the dividend, right? So where can we find the dividend? It's in here, as you can see. Dividend. So dividend is the amount that is, or the return that is given to the shareholders, right? Dividend is the amount or the return that the shareholders get from their investment. So that is what we are going to find out now. This is the dividend income, dividend expenses. It is I think I found the dividend. Okay, dividend, they did not have it over here. I had to go to this statement of changes in equity. Yeah, now I remember. So I had to find it from the statement of changes in equity. As you can see, you have the dividend expenses in here. Dividend to equity shareholders, see that? This line, 1913. So this was actually 2020, I think. Oh, sorry, this is a group dividend. Then if you take the company dividend, which is also the same, 1913, this is related to 2020. So I'm going to take it 1913. And again, if you're doing a research, if you're doing an analysis for a research, a complex problem, remember EPS, DPS is usually given in the annual report. You can find out, just type EPS or DPS, you will be able to find out. The company has already calculated it, right? You will be able to find it out. But even interest cover, you'll be able to find out. But since this, you have to do the calculations, you have to do it manual, right? So you can't say, okay, it was in the annual report, so I copy pasted it here. So here in this level, at this level, we check whether the students are able to do the calculation, whether they understand how to substitute the numbers to the formulas. Therefore, you need to do the calculation. right? But if you're doing a research, as I told you, if it is something, something different, if you're undertaking a finance research, if you're doing quantitative analysis related to finance, in that case, because you have to do a lot of calculation, not just one company, you'll have to take around 40, 50, 60 companies if you're doing a quantitative research. So in that case, you can take the calculated answers and substitute it here. Okay. Right, 191320. Wait. Yes, 2021, they would have given somewhere. Okay, I'm going to take 1913 for both years. In that case, okay, you're going to get the same amount. It's okay, fine. That's fine. Because I can't remember where I found where the 2021 amount is. So I'm just going to take the same amount for both. But if you can find out the different amounts, great. Okay, so now I want you to calculate and tell me what the answer is. I've given you the answer already. Sorry, I've given you the numbers already. You just have to substitute and tell me the answer. And in the meantime, let me try to find out the other dividend. Please do the calculation. I want everyone to do the calculation. Okay, here you go. This is the one. Now I remember I had to take it from the statement of cash flows. 2689. 2689. This is 2021 is 268. Please calculate it now. So now you get an accurate answer. 2689. Calculate and tell me the response. Did I take companies or group? Oh, okay, it's the same for both. Okay, I only received one answer. What about the others? Please do the calculation. You have to do a lot of calculations for your assignment. So you need to practice doing it. It's simple. You just divide the numerator with the denominator. That's it. Okay, Zahara's answer, EPS. That is correct. Good job, Zahara. What about the others? Yeah, I have taken 1805, rounded it off. You get me, Kaushi? Because I can't take 1,804,008, the entire amount, because everything I rounded it off. I've ignored the zeros. Got it? Because if I have to take all the numbers, it's difficult. If it's confusing for you, what you can do is you can take the entire amount. So here, I believe these are given in billions or millions. These are in millions. So if it is confusing, you can take in millions. Right here, 1,084,000, 880,000, 1,293,000. Yeah, so if it is confusing, you can take. So here I ignored the zeros. That's why it's 1804. I hope it's clear now. Yeah. Very good, Anas. That is correct. Zahara's DPS, let me calculate it. Yes, that is correct. Wait. No, DPS is different. Yeah, DPS is actually different in both years because I told you I used the accurate dividend. Dividends are different in both years. Right, let's calculate. Easy. This divide by this. This divide by this. This divide by this. And here, this divide by this. This divide by this. Oh, it's here. I should have divided. Okay. Done. Right, let's see. Now, as you know, EPS is the earnings per share, and earnings per share shows the relationship between the earnings of the business to the number of shareholders during a time period. Remember, a higher EPS indicates the company has higher level of earnings compared to the number of shares issued or outstanding shares. So a higher EPS is favorable for the company as investors will be willing to pay more for the company's share, whereas the lower EPS is the opposite. Okay? And comparatively, you can say 2021 is better than 2020. And moving on to DPS, which is dividend per share. This, I don't know whether you remember, but this shows a relationship between the annual declared dividends issued by a company for every outstanding ordinary share. So higher dividend rate indicates that it is favorable for the company. So when the investors are planning to invest, they will look into the DPS. What is the dividend? What is the return they get per share? Get it? So they will be comparing the companies, not only the DPS, but they will also look into the others. But DPS is one of the ratios that they will look into and find out whether company A has a good DPS or company B has a DPS or company C has a better DPS. Yeah. And if you look into these 2 years, actually, there's not much of a big difference, a very subtle difference. And then you have dividend cover. So dividend cover, this shows the relationship between the earnings available in the business to cover up the dividends of the shareholders. So an ideal rate of a dividend cover is 2. If it is more than 2, good. But if it is lower than 1.5, it is not favorable for the company. And both the years you can see 2021 and 2022, it is more than 1.5. So they're doing great related to investors ratio, related to dividend cover. So when you do the analysis, when you interpret the data, so once you have got the result, right? When you've done the calculation, you get these results, right? So when you do the comparison, make sure that you take the data from books or from, journals, reliable sources. And when you explain, you need to give the credit to the original author. Yeah, of course, obviously, you can't say, okay, 2.1, it is 1.5 is, if it is more than 1.5, it is favorable. If it is S1 1.5, it is not favorable. You can't come up with this, right? It's definitely you have taken this information from somewhere. You've read it from a source, maybe a journal article, maybe books. You read it somewhere and then you came up, okay, this is the analysis, this is how you interpret it. So you have to give the credit to the original author. I know you did the analysis, but from where did you get this information? From somewhere. Yeah, so you have to give the credit to the original author. So when you're doing the interpretation of this calculation, make sure that you give the credit to the original author. So I actually read books from ACCA, right? If you have ACCA textbooks, they give you simple analysis. They explain it simply. It's good. And I also used a book from Atril. I think that is financial management. I don't know whether I've uploaded it on the LMS. Maybe I'll try to put the book on the group. Just give me a reminder. I still have that book. That's a wonderful book, and it's the way they've explained the calculation, the way they did the analysis, the interpretation. It's great, and you'll be able to understand it. So if you can use these 2 books, or if you can use other books, no problem. But when I did my analysis, when I was doing my degree back then, I used these 2 books to do my analysis. So I gave the credit to the original. So these two books were the only books that I used while I was doing my degree. But when I was doing my master's and the PhD, I used other articles as well, journals and everything else. So you too can use journals. Make sure, I'm always saying this, do not take information from websites unless unless those websites are reliable. So if those websites are university websites, if it is government dot UK dot something, that is reliable, that the source is credible, go ahead. JSTOR, use a lot of journal articles. Again, I'm telling you, ranked journal articles, not the predatory journals. You can't use predatory journals because they are not peer reviewed. They're not checked before they're published. So you don't know whether those information is accurate or not. So when you use journals, make sure these journals are ranked. So you can use the JSTOR. Majority of the journal articles that are published on JSTOR are ranked. And as I told you, install the rapid, what did I say? Rapid some extension. I did tell you about it in one of the previous sessions. Use that extension, and in the Google Scholar, you can type and automatically the ranks comes in, and you can download the particular journal article and then read it and find. Again, you don't have to read the entire journal article. As you see, when you're using a PDF document, just type in the search bar and read only what you need to read. Okay, so it's not that you downloaded 10, 20 journals and you have to read each and every journal. Not at this level. Not at this level. But you have to do it when you do your PhD. You have to read a lot. You have to read a lot. And you have to dedicate a lot of time for that. But at this level, you don't have to do so much of reading. So you can just type on the search bar whatever the information that you need, understand it, and then summarize in your own words, and then do the analysis. Clear? Please do not take from websites unless it's reliable. Website should be the last option. But majority of the students, website is the first option. No, there are books. There are good books. There are good journal articles. There's so many journal articles that they've done financial analysis. They've used ratios to do their research, right? Please, there's so many journal paper, not journals, paper articles as well. Not only research, but also paper articles where you can get the information from. So books, journals, then website. If you cannot find any information in these two sources, then go for websites. Websites should not be your first option. Okay, get used to it. Get used to it. Don't go to website first. Get used to getting these journal articles, read books, and then get info. And Atri's book is actually very good. It's they've explained it in a very simplified manner. Anybody can understand. And I also have another book called Accountants for Non-Accountants, something like that. Accounting for Non-Accountants. I don't remember the book exactly. I have a few books. Let me know if anyone needs it. I'll try to upload it on the LMS so you can use it. Okay. Right. These are investors ratio. And finally, we are going to calculate the efficiency ratios. Okay. Efficiency ratio. So efficiency ratio, how many ratios did we discuss? 3? I don't quite remember. Wait, 3. I think I spoke about the stock holding, creditor, and debtor, right? Those 3 were the ones that I discussed during the class, if I'm not mistaken. Stock holding period. So stock holding period equals to stock holding period equals to what was that? Average stock divided by cost of sales into 100. And investors, the ratios that we did, DPS, EPS, I forgot to tell that. EPS, DPS, and EPS and DPS is the currency. You have to use currency, okay? Dollars, pounds, yeah? So you have to use that as the answer. So it will be the answers that we got: 1.49 pounds, $1.06. That's how you have to write. And dividend cover is times, okay? Now, moving on to efficiency ratio, it's average stock divided by cost of sales into 100. Yes, that's a formula. And then we have the other formula, that is for creditors payment period, which is equal to average creditors divided by, credit purchases. If the credit purchases are not given, you can take the entire purchase, okay? If the credit purchases are not separately given, that's fine. You can take the entire purchases that has been specified there into 365. Yes, 365 days, remember, into 365. And the other one is debtors payment period. So debtors payment period, sorry, not debtors payment period, debtors collection period. Creditors payment period, debtors collection period. So debtors collection period equals to average debtors. And there it was credit purchases. Here it is credit sales. Again, if credit sales are not given separately, and if you don't have any way of getting credit sales separately, you can take sales as the credit sales. There's no harm in it. But when you at the limitations or at the end, or you can just put a note, the credit purchases was not given in the annual report, therefore purchases was taken, something like that. You can specify. Okay, stock holding period, average stock. Where are our stocks? So stock means inventory. Okay, I want you to find the average stock, please. So average stock is you're going to add both years and then find the average stock. Oh, you need the previous years. 2019 is average stock. So I think we'll have to just do 1 year. For 2020, we don't have the information. So we'll have to just do 2021, okay? So everyone, please calculate the average stock and tell me. Average stock means opening, 2021, 2022, opening, closing, inventories divided by 2. Tell me the answer, please. You calculate and tell me. I'm not going to calculate. I'm waiting for your response. Yep, Kaushi, that is correct. So you can round it off. Waiting for the others. Kaushi's answer is correct. So we can't calculate 2020's average stock because we don't have the information for 2019. Therefore, I'm only going to calculate this year, but you have to do it. You have to find the annual report of 2019 and then calculate it when you're doing your analysis. So average stock is 2039 plus 2,634 divided by 2. That's it. And Kaushi's answer is correct. So Kaushi's answer is 2337. I rounded it off. And any other places? No, we only need average stock over here. Right, average stock divided by cost of sales. The cost of sales is in here, the income statement. So cost of sales, you can take again the direct cost, this amount, as your cost of sales. So here we have 34,919. 34,919 stock holding period equals to this divided by this into 365. And this is days, okay? 24 days. Next, we have creditors payment. Again, average. We need to find the creditors. So creditors is in the statement of financial position. Now we have a problem. We don't have the information of the creditors. So what do? We go to note number 26 because it says trade and other payables. Trade and other payables means creditors. Okay, it's another term that they use. Actually, most of the annual reports, they don't use the term creditors now. They use trade payables instead of creditors. So we don't have the creditors amount or trade payables amount separately. So we have to go to note number 26 to find it out. So let's go to note number 26, which is all the way down. Note number 26. Yeah, trade and other payables. So you can take 164 and 1303. Yeah, these two as the payables. 164 and 1303. The others, no. They are other payables. So that is 164 plus 1303. Okay. And also this one. So you have to find the average creditors. Remember, average creditors. So 164 plus 1303 plus 180 plus 1157 divided by 2. Plus 180 plus 1157. So the answer is 1402. Okay. 1402. Let's take the payables as well. So we don't have to come back here. Payables, I think it should be before, sorry, receivables, not payables, receivables. So receivables has to be before payables. Okay, receivables are here. As you can see, take those information and then we'll fill in the average debtors as well. Okay, debtors means trade receivables, another term. 17253 plus 2042 plus 6 plus 2182. Oh, you have the amount. 19,295 plus 6. Oh, you have the provision for doubtful debts. Okay, guys, I forgot. My mistake. I didn't read the entire thing. Look, you have the trade receivables net. This is the amount you have to take, okay? Because provision for bad, they have provided provision for bad and doubtful debt, so we have to exclude it from the trade payables. Sorry, I keep messing up. Trade receivables. You have to take it from trade receivables. Right. What do you mean by provision for doubtful debts? Does anyone know? Have you heard of something called bad debts or provision for doubtful debts? Provision for doubtful debts means, companies may have many debtors and you're not 100% sure. Say you have 100 debtors. Are you sure that all 100 debtors are going to settle their payment? You're not quite sure. Yeah, maybe 80 debtors will make the settlement. The rest of the debts is an estimated amount, or they estimate, they calculate a percentage from accounts receivable, right? So when the business expects that there will be no settlement from the debtors, they allocate something called provision for doubtful debts. There is a concept called prudence concept in accounting, right? So if you're applying prudence concept in accounting, which means anticipating possible losses before they occur. Prudence concept means you anticipate possible losses before they occur. So provision for doubtful debts is under here. So as I said, not all customers will settle their payment. So every year, they will be providing a provision. They will take a percentage from the debtors and say, okay, we have to deduct this in order to get the net debtors. So as you can see, they've deducted a percentage from both years. So this is the net trade receivables. So this is the amount that we have to take into consideration, okay? When you're analyzing the annual report, please be careful. You might make these errors. So you might ignore the provision and take the amount here, which is not accurate. That is not right. You have to take the net receivables, which is 12,988 plus 12,285 divided by 2. Yeah. So that is equals to 12,637. 12,637. 637. Clear? Has anyone got any questions? So far, is it clear? Yes, no? Please type something on the chat box or unmute your mic and tell me, is it clear? Yes, it's very clear, no problem. I need responses. Is it clear or not? I'm not going to continue unless you clarify that to me. Clear. Okay, just one student. How about the others? Okay, clear. Again, few responses. What about the others? I'm waiting for the others to respond, please. Why we divided by 2 to get the average? It says average, right? Average stock, average creditors. So that's the reason we divide the opening stock with the closing stock to get the divide by 2 to get the average. Same with opening creditors, closing creditors, divided by 2 to get the average. Is it clear, Anas? Yeah, okay. Right now, we have to take the credit sales. Again, there is no credit sales in the annual report. So we are going to take this amount, the revenue, the total sales, because they've not given the credit sales. And again, with the credit purchases, there's no credit purchases and there's no clue to find the credit purchases. Therefore, we are going to take the direct cost as the credit purchases. Again, this is an exception, right? This is an exception. If you can find the credit purchases, go ahead and find out. Let's go to note 7 and see whether we have any clue to find out the credit purchases. If so, we'll find it. If not, no, there's no clue about credit purchases. So we'll have to take operating cost as a credit purchase because there's no clue about it. Okay. No clue. So we'll have to take it. Okay. But this doesn't happen in all annual reports. Some annual reports, they would have specified the purchases. So we're going to go with that amount, which is 34,990. Is it 34,990? Yeah. So now calculate, please. remember to multiply it by, oh, this one, stock holding period into 365 days. Okay, I did the calculation right, but this was wrong. I noticed it just now. I did it right, isn't it? Multiplied by 365. Yeah, that's correct. 365 into 365. Ooh. The debtors collection period, look at the amount, 77 days. That's too much. 77 is too much. Right, let's analyze the stock holding period. So what does the stock holding period calculates? Stock holding period or measures, they measure the number of times the stock of the organization is converted into sales. Shorter, the better, right? Meaning the shorter stock holding period is better because it means that the stock of the business is traded quickly and the company is efficiently managing the inventories of the organization. If you get a higher stock holding period, this implies that the stock of the company takes a long time to sell their inventories. Is that clear? So shorter the better. So if it is in 2020, if it is 20 days, it means 2020 is doing better than 2021 because 2021 is 24. Next, creditors payment periods. As you can see, they've got 14 and 9 for 14, which is 15 if you round it off. So you can see that it's okay. Yeah, I mean, it's not bad. They're settling the creditors payment within 15 days. It's okay. It's fine. Half a month. They only take half a month to pay the creditors. So it is good. You're able to maintain good relationship with the suppliers. But when it comes to the company's point of view, it is better, not better, I would say better, but if the company is taking a longer period, then it is good for the company as the management of the working capital will be efficient for the company. So if they are unable to, or if they have a problem with their working capital, so one of the advice given is to delay the payment given to the creditors if they have a problem with their working capital, right? If they have a problem with their working capital management, again, working capital management, you'll be learning about it next week. Yes, you have working capital. It's a cycle, working capital cycle, which you'll be learning in detail in the next session. Maybe next week. I don't know whether it's on Saturday or Sunday, but I will be teaching you about working capital cycle. So anyway, so the thing here is that when it comes to the company's point of view, what they say is the longer the period, the better it is for the company, as the management of the working capital will be efficient for the company. But again, delaying the payment may also have a negative impact towards the creditors. Okay. Anyways, having said that, the average credit payment period is 30 days. So if it is less than that, it's good for the creditor, supplier's point of view. But if the management or if the company is able to manage their working capital well, so 15 days is not bad. So if they're able to pay the creditors on time within 15 days, meaning they'll be able to maintain a good relationship with the creditor. And the creditor will have no issues in maintaining or continuing their contract or business with the organization. Debtors collection period, this is way too much, 77 days. Now, what does a debtors collection period calculate? This ratio calculates the number of days the credit customers take to settle their debt. So if it is a shorter period, it is better, meaning then the working capital of the organization is running smoothly or it's effectively managed. Again, the average debtor collection period and the average creditors payment period is 30 days. But you can see the debtor collection period of this company is 77 days. It's too much. It will be very difficult for the company to manage their working capital. when the payment gets delayed by 77 days, it's too much, right? So what can the company do? The company can provide discounts for early payments. So you can say, okay, we'll be providing a 10% discount if you're able to pay before the 15th of May. So if you can give this, or also you can also do something like this. You can charge something called a penalty charge on late payments. So in that case, obviously, the customers will try to pay early because they will have to pay the penalty if they delay the payment. So this way you can encourage the customers to make the payment. So these are efficiency ratios. Is it clear? Has anyone got any questions? I wanted to start the next chapter, budgeting, but we only have 5 minutes, so I'm going to start it next week, and I'll finish off budgeting, and we will be learning about budgeting. What is budgeting? We'll be learning the different types of budgets. We'll be learning about the budgeting process, the importance of budgeting. And if you need to learn the calculation of budgets, I also have provided you some recording links where you can go and watch them. It's not important, or I wouldn't say it's not important. It's not tested in your assignment, the calculation of the budget. Okay. But if you need to see how it's done, how the calculation is done to get a better understanding, you can listen to those recordings. So next week, I'm going to start the chapter budgeting. Thank you so much for attending the session today. I'll see you next week with another session.